Hello and welcome to the forum. Every week, we take no more than 15 minutes to discuss the 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. The live forum and Q&A session are exclusively available to Smartkarma Plus subscribers. You can always revisit previous episodes on this YouTube channel. Without further ado, let's dive into this week's ideas.
A very good evening, everyone, and welcome to Smartkarma's weekly forum. As a reminder, the forum is a high-impact weekly live webinar that's exclusive for Smartkarma Plus subscribers. We use this as an opportunity to present some of the best, highest conviction insights, as well as important themes as surfaced across the Smartkarma network. The forum is meant purely for informational purposes. It is not investment advice. It is also not the opinion of Smartkarma, but that of our research providers. And lastly, Chatham House rule applies. Please refrain from sharing any of this material on social media without express permission. Every week, we bring to you 3 key ideas as surfaced by the network. We try and show a mix of small cap names, larger cap names, and also important thematics. At the end of the week, we take video recordings of the forum and upload them to our YouTube channel, so that in case you've missed the live session, you can catch up on it. You can also share this with your friends easily and get their thoughts, opinions, and advice too. This week, we will begin by taking a look at REX, which is a small cap oil and gas company listed in Singapore. We will then move further north and further east towards Japan, inspecting one of the biggest growth themes in the past, which was tourism. And lastly, we will take a brief look at how large investors are currently positioned within emerging markets. At any point of time, you can ask us a question by using the Q&A button on our Zoom application. If you are shy, you can hold back and post discussions on the platform and have analysts answer them directly. Let's kick off with REX. This is listed in Singapore. The market cap is just over $300 million US. It trades about $6 million a day, so it's fairly liquid, fairly actionable. It's a name that we have presented before to you. It's a name that has more than doubled since the first presentation on the forum. Nick van Broekhoven is the analyst who covers this company closely. Brief recap for those who might have missed this name or are not familiar. So REX is an oil and gas exploration and production company. It has oil fields and concessions in Norway, UAE, Oman, and in the US. It's been listed in Singapore for a while, and it's one of the only pure oil and gas companies that are listed on the exchange here. Now, there has been recently a new options program announced where the key members of the board are getting stock at over 45 Singapore cents and over 60 cents. You will notice that this is higher than the prevailing share price. We noticed that there have been production issues in some of their markets, such as Oman. This needs to ramp up. 20,000 barrels per day is the long-term target. They're not there at the moment. All in all, if they were to ramp up the production, we think it'll be a win-win for the shareholders and the board. They will get good money on the options that they are about to receive. In addition, Nicholas and some of the other analysts have been pushing the management for a bigger buyback and a bigger dividend starting this year. That's something that we look out for. We'll also note that the stock has moved from the junior board, which is the Catalyst board, to the main board, which means that so long as the management deliver on their program as well as are shareholder friendly, you will see a lot more institutional participation. The name remains extremely cheap at about 2 times EV/EBITDA and a 7.5% dividend yield. Moving on to Japan tourism. This is sort of an important theme, and there are several stocks to play this. Analysts such as Mark Chadwick are covering this on the platform. As you will see from this graphic on the right-hand side, tourism numbers have completely cratered in Japan ever since COVID restrictions took ground. Now those are starting to ease. So let's take a look. So from this month onwards, Japan has taken its first steps to reopen borders to visitors from the US, Australia, Thailand, and Singapore. If you look at where tourism or tourists come from for Japan, back in 2019, 70% of all visitors were East Asian. Chinese were the key spenders. That market has not yet opened up to Japan. For that to happen, Japan will need to further loosen restrictions. However, we do notice that they've taken the first step in the right direction. Now, we've seen how this has impacted share prices in other markets. So with the benefit of that, we can say that this is going to be a catalyst for retail stocks in Japan. And Mark Chadwick's stock pick here is Matsuhiko Kokokara, but this is certainly not the only stock to play Japan tourism. There are certainly many, many more names. And you should go and take a look at Mark Chadwick's piece and some of the prior pieces on Japan tourism for this. Also, something interesting and exciting on the Smartkarma platform, you can build watch lists of names and share them with your friends as well, so that you can track a group of stocks exposed to a particular theme quite easily. Okay. I've got a question coming in from Terence on Rex. The question is around Rex's Oman production, which has steadily dropped. Let's go back. You're absolutely right, Terence. Its production has dropped. It is a cause of concern insofar as management's view on that. They have guided that Oman will ramp up with new equipment, and also as soon as monsoon clears. This is a key risk that we will be waiting out for. And also it is one of the reasons why the share price has not continued to march on higher. It has actually been a bit of a disappointment to us. We think the other disappointment also has been, the management has been relatively conservative on how much dividend they've paid out and other capital action. So, if you look at Nick's recent insights, he's actually, let me just open it and quickly sort of show it to you as well. He's labeled it as show me the incentives and I will show you the outcomes. So we are clearly on side with shareholders in asking the management team to deliver more, both in terms of production, but also in terms of, capital management. Thanks for the question. Just moving on to the last section for today. This is how people are positioned. We've got a great strategist on the platform, Stephen Holden, who looks very much at positioning across sectors and stocks. His name is Stephen Holden, and I would recommend you follow him because you can get great reads into areas of risk and also areas of opportunity. So across emerging market, Stephen Holden tracks 252 active global emerging market funds. This is pretty much all the funds that actually disclose their positions, and the combined AUM is north of $400 billion. So this is pretty representative. As things stand, the largest individual fund positions are TSMC, which is in Taiwan, semiconductor manufacturing, followed by HDFC, which is a bank in India, or rather, I should say, a financial institution in India. Then AIA, which is an insurance company, Kotak Mahindra Bank, and Reliance. We have seen, people continue to grow ownership in some of the tech names like JD. The largest combined stock level inflows have also been largely around tech companies. So one very interesting thing to note here is that, most large investors are still very, very heavily positioned in tech companies. That is a cause of concern into a higher interest rate environment, because as we've started to see in the US, tech is actually underperforming, and we're starting to see other sectors such as energy, materials, and financials, lead the market. So we continue to feel that investor positioning is too skewed and too narrow, and you should continue to see more opportunities and reward in looking away from where vast majority of large institutions are positioned. And that's, I think, a key merit in listening to an independent research platform such as Smartkarma. We're always looking for what's market variant, what's differentiated, and where the best areas of opportunity as well as risk lie. Look, with that, I'm at the end of today's presentation. If you have any further questions, please leave them as discussions points on the platform, and we will come back to you. Thanks very much for your participation, and hope to have you with us next week. Take care and bye-bye.
That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button. If you like these ideas, spread the word. Tell a fellow investor about Smartkarma Plus and follow us on social media. Just search for Smartkarma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thanks for watching and see you next week.